This is the 10-Minute Contrarian Podcast. This is VP. We're a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 179 is brought to us by Bybit. First off, I want to say it again, congratulations all you crypto traders. You are murdering it, and you're making money in things that go up. I mean, you do make Tether on Bybit, but you also make Bitcoin and Ethereum, whatever else you're trading as well. And Tether has been going up too, which we will soon talk about here. However, you too can also have all of these things and get a bunch of great benefits as well. I've barely even talked about the Bybit card, and for the sake of time, I won't this time around. But this thing is a whole plugged-in ecosystem with a spot market on top of it. Like, you can do everything here. And if you want in with all the benefits, just go down to the show notes, click the blog for Bybit. My affiliate link is at the bottom of that blog. Click it, sign up, and reap all the benefits because with Bybit, membership has its rewards. It is the 10-Minute Contrarian Podcast, and I'm a little bit perplexed here as to what to do going forward with episodes because this here, today, episode 179, is going to be another part of the dividend series. Even though it's not going to seem like it, we're still using concepts that we learned throughout this series. There's other stuff in the dividend world I would like to talk about. Problem is, there's other things I would also like to talk about. And for fans of the show, you know that come the very top of January, we're going to start with our prediction episodes. So do this, help push me one direction or another. For those of you on audio, go to YouTube. For those of you already on YouTube, go and give this episode a like and let me know if you are enjoying this dividend series we're doing. I can certainly keep it going. And it's not like we're going to be missing out on buying anything that's cheap right now because all the things we like to invest in are mostly going up, as they have been for a while. You know, it's funny how that combination of research, patience, and common sense pays off over time, isn't it? But anyway, on with the show. Now, we need to talk about the actual cash we have on hand. I don't know you or your financial situation, but I would be willing to bet that because most people just in general, even on this show, are just risk averse by nature, that the majority of money you have in your possession is probably sitting in your bank account. And that money, probably unbeknownst to most people because it happens slowly until it doesn't, is getting eaten in some way. Or maybe if not completely eaten, could really be put to better use than just sitting there in your bank account doing nothing. You know, now we've talked about ways to mitigate this or to really take advantage of this in the past, especially when we talk about passives, especially if you want to go back to the episode called FYPM. If you have not listened to that episode, you should, because that's some real rich people stuff right there. You know, taking the cash you have and actually having it work for you instead of having it work against you. And the crazy part is you can have a little money or a lot of money, and all of these things apply to you. The difference is rich people don't hoard their cash because they're so afraid of it going away. They realize that the chances of it going away are very small, and they need to put it to work by taking a little bit of risk to get a really nice return. And we should be doing this at every turn as well. Now, you don't have to do this with all of the money you have in your bank account. I get it. There is going to be a little bit of risk involved here, and we'll talk about that. But people got a real wake-up call when inflation hit back in 2022. You know, this affected everybody. And for some people, it affected them for the very first time in their entire lives. You know, I was telling one of my liberal friends the other day, you know, why the election went down the way it did. And I said, look, man, when things are good, nobody pays attention. And you can get a lot of stuff, buy them, and they're just simply not going to care. But as soon as things aren't good anymore, then people start paying attention. And again, it's crazy. I think in the United States, people aged 20, 30, 40, 50 on up probably started paying attention for the first time in their lives. Unless they were around and making money in the 70s, you know, this was a real wake-up call. And it was a helpless feeling, too. They're like, well, I have this cash, and it's just getting eaten alive, and there's absolutely nothing I can do about it. While we knew this whole time that there was absolutely something you can do about it, you don't just have to sit there and take it, because as something is going down, there's always something out there that is either going up or retaining its value. And so a lot of us here in contrarian land moved over into things like gold, like Bitcoin, because in many cases we were already there. We were already prepped and ready for something like this. So simply pushing more money that way wasn't scary or weird. It was actually very easy. Now, for diversification's sake, places like gold and Bitcoin and particular stocks don't have to be the only place your money goes to protect the money you have. This might sound crazy for somebody who's holding USD, but yes, taking some of that money and putting it in other currencies can also be a very good idea. I mean, you guys are all Forex traders, right? Or the majority of you are. You know how Forex works. You see charts. Even the dollar gets weaker. And there are absolutely appropriate times to take your money out of the dollar, for example, and into another foreign currency. And if you're already holding a non-dollar currency in your bank account, then it is probably a really good idea to move that money into something stronger, regardless of what it is. And you also know, as Forex traders, that this doesn't have to be terribly risky. I understand it is scary taking the cash you have, the cash you might actually have to use, and somewhat investing it into something else you're less familiar with. Which, by the way, people need to get that mentality out of their heads. You're not really taking it and investing it, so to speak. You're really just moving it over into something else, and you can instantly move it back if you need to. So many people think that when they put their money somewhere else that it's gone. It's not. It's just sitting in a different place, and you can always move it back to its original place at any time. But as we often talk about on this show, what is the risk of not doing something like this? When you're sitting there looking at a chart, and the thing you hold is probably going to get weaker for the time being, and there are other things out there getting stronger. Again, do you just want to sit there and take it and allow your spending power to go down? It doesn't have to be that way. And we are now entering a time to where I think the Forex market is going to get a lot more volatile. If you go to the DXY and just look at the dollar itself, we've been stuck in a range since the beginning of 2023. Now, thankfully, this was not as painful as the range we were stuck in from 2018 through 2020. That was particularly brutal. So for trading, it's been better. But like I said, I think it's going to get a lot better because of what's going to be going on with the dollar. Now, what is going on with the dollar? Well, good question. Now, the Trump administration all wants a lower dollar. This new administration is quite ambitious in what they are trying to do, and all of those things need a cheaper dollar to be accomplished. However, the opposite is happening right now because the world really believes that this was the big change the United States needed to really get right and become that economic superpower that it was always meant to be. We talked about this a couple episodes ago. It still pretty much is, but it can do a lot better, mainly by getting rid of a bunch of dead weight and restrictions and regulations that don't need to be there. So now everybody wants to be in the United States in some capacity, and that includes the currency. So we're almost having a dollar milkshake type situation where stocks, gold, Bitcoin, and the dollar are all going up. The United States and the United States dollar is eating the world, so to speak. And this is probably either going to keep happening, and there's not a whole lot that anybody can do about it, or this administration is going to get what they want. Now, Chairman Powell has said he's not leaving, and he has also said, and again, this administration needs this to happen too, that he is going to continue to lower rates on the dollar, which for all of us Forex traders know makes a particular currency less attractive than it was before. So whether the main currency in your bank account is the United States dollar or a different currency, you are probably going to want to pay attention to this and act accordingly. So let's talk about some of the ways you would go about this. Now, all of these are ways we've talked about in the past, but it's been a while, and I don't know how many of you are new, so we need to go ahead and talk about it again. The first, and I think the best way to approach this, is to have a bank account that allows you to do something like this. Now, for people not in the United States, this is going to be quite easy to do because a lot of banks do allow it. If your bank does not, you should probably have a pretty easy time finding a bank who does. Now, if you are in the United States and you don't have any other foreign residencies, this is going to be a bit tougher. Everybody should be at least thinking about getting a foreign residency because it does open the door up to a lot of things, namely offshore banking and the flexibility these banks give you. The bank I have, and I don't say the banks I have are where I store my gold or anything like that, but just to let you know, these things do exist. They have, I think, 10 different currencies I can store my money in, and they're all attached to very strong banks all throughout the world. And they also have a gold product and a Bitcoin product that at any time I can move my USD into and allow it to sit there until the time comes for me to turn it back into whatever. It's pretty great. I can trade my actual money, my actual cash. And if you are at least half decent at Forex, like above a break-even trader, this is going to benefit you. So you need to find a way. Now, if you can't do it this way, as we've spoken about before, there are fintech apps out there. Wise is the main one that gives you the best selection and the lowest rates as far as I know, but there have been a lot of other fintech apps that have come about since. Now, I don't know them because between my crypto platforms and Wise and my offshore bank, I really don't need to look anywhere else, but I know they're there. And if anybody wants to go to YouTube and go to the comments section and list some of them, places where you can also hold different currencies, please do. Let the people know. Because I know these things exist. Because I've heard people talk about them. I just haven't had to go explore those options myself. And lest I forget, and I talk about this company all the time, I need to actually go to them and see if they're open for a sponsorship. Because every sponsor and affiliate I've ever had has come to me. I'm actually going to go to them. Because I don't want them to, but they just keep doing everything that we talk about here on the show all in one place, and that is Uphold. If you want to do all this specifically on the blockchain, you can do that. Uphold allows it, and with this new administration, I don't see any barriers in their way. They will probably add more products. But on Uphold, they have everything. They have all sorts of different cryptos you can buy and hold. They have a bunch of different fiat currencies. They have stocks, ETFs, metals. It's ridiculous. You can just do it all right there if you wanted to. So my main point is just know that every single person out there has options. You're not helpless. Most people probably think they are. They don't listen to shows like this. They don't pay attention to their finances. They think that whatever they're holding is just whatever they have. And if it goes down, then, woe is me. No, you can actually hold on to your spending power and in many cases increase it simply by taking the cash you have in your bank and being agile with it instead of being stagnant with it. Now, if the currency you hold is super strong and it's just off to the races and it looks like it's just getting stronger and stronger, then that's fine. You don't need to do anything here. But we all know this isn't always the case, especially Forex traders. Everything gets strong and everything gets weak after a while. Unless you're the Japanese yen, then maybe not. But if you zoom out and you use the monthly chart, like we've been talking about, and you simply transfer your Forex algorithm over to there, not only should you have a better than average chance of knowing what's about to go up and what's about to go down, you also have a really nice risk profile already baked into the cake. Because look, I know that like anything, there is risk here, and it's going to feel really strange when you're trading the money in your own bank account for something different. That's a weird feeling. That's a weird transition. But that doesn't mean it's not the smart thing to do, because it absolutely is. Again, we talk all the time on this show, the riskiest thing, most of the time, is taking no risk at all. And like we said at the top of the show, for a lot of people out there, this reality doesn't hit them until it does. To where we here in contrarian land all know that if something is going down, there has to be something else out there going up. And we can leverage that, and we can take advantage of that. And I will be doing a lot of this, probably for the rest of my adult life, because there's just simply no reason not to. Now, there are risks involved. I don't think the risks are great, but you do run into two different types of risk out here. You run into currency risk, but as we all know in Forex land, this is quite rare that something would just crash overnight. The last time we saw this was probably with the pound sterling, and looking back on it now, we pretty much know that we can pretty much assume that a lot of it had to do with the suspicion I had that it was nothing more than a ploy to get Liz Truss out of office. Because if you also go back and look, the pound went right back up to where it was soon after they got Liz Truss out of office. So on a long-term scale, like on a monthly chart, it would look like more of a flash crash than anything else. Actually, if you want to go to the monthly chart right now, I'll bet if you look, I think it was September through October, she was there. You'll see a wick down. But what's crazy too is if you were trading that for whatever reason, it was already going down. And because we're on the monthly chart, the whole thing, as wild as it was as the time, was pretty inconsequential in the grand scheme of things. So there are day-to-day risks. But if you're zoomed out in this particular situation the way we're going to be, I don't really see currency risk being a big thing, at least not in the 8 majors. So just know it exists, but I don't think it's much of a boogeyman here. I think we can just kind of power through it and not worry about it. Now, the only other risk you're going to have here is platform risk. So by platform, I mean the bank itself, or whatever bank is attached to the fintech app you are using. And we did a whole episode on this. If you want to go to your podcast player of choice or go to YouTube and type in fintech, you can go find this episode. We showed and we exposed that some fintech apps are a little safer than others because of the banks they actually attach to. Now, a lot of them have been going strong despite this, but just know that that is also there. And understand, too, I don't do this with all of the cash in my bank. I do it with about half. Now, I think that half is probably going to grow over time, but it will never be 100%. Just in case something absolutely insane were to happen, you want to protect yourself against that. But look, this is the currencies market. Currencies don't completely crash and burn, at least not in the 8 majors, and at least not to the point to where your stop loss isn't going to get triggered, and you're out 2%. Big deal. Some of you guys are probably sitting in currencies right now that have dropped more than 2% in the past few months, simply by you sitting there doing nothing. Again, nobody talks about that risk. The risk of sitting there doing nothing and allowing your own currency that you hold to lose its value, even though you knew, because you can read a chart, that it was probably going to do that. I just don't understand it. Why would you allow this to happen? It doesn't have to be this way, contrarians. We can get the best of it at every turn, and that includes the money we just have sitting there in our bank account doing nothing. I mean, imagine getting the best of it in the market and getting the best of it via dividends and passives, and then also getting the best of it in the money you just have sitting there in your bank account because you are intelligently getting it to work for you. Remember, most people don't have this luxury because they don't know how to trade the Forex market, to where we have a very unique advantage because we do. This is why so few people out there talk about concepts like this, because they wouldn't know what to do, they wouldn't know how to do it, and even if they did know how to do it, they wouldn't know how to do it well. This here, what we're talking about in episode 179, is a very unique advantage that we have. And it's so unique that it's almost weird to even talk about. Like, who would even bother fucking with the money they have sitting in their bank account? That's for you. That's for your own safety and well-being. Well, sure, it is, until it's not. And it's going down a lot when it doesn't have to. But here's the crazy part. It doesn't have to for us, because we're not them. Now, God forbid you tell a friend or a family member what you're doing here. They're going to look at you like you have two heads. But most people have a very poor understanding of finance. They have a very poor understanding of trading. They have a very poor understanding of the currencies market. And none of those things apply to us. And to the victors go the spoils. So no, we are not crazy. We just simply know what to do.